Good afternoon, everyone. I am Beena Verma, co-founder Metal Trends, and it's my absolute pleasure to welcome each one of you to this insightful session in our ongoing webinar series, Trends in Metals Market Outlook 2025 H2 Insights. Thank you for taking the time to join us as we explore the evolving dynamics of global and domestic metals landscape. We have stepped into the second quarter of the year, and with Mr. Trump's tariff related uncertainties, the global market stands at a crucial crossroads shaped by an intricate mix of global uncertainties, shift demand supply patterns, and an ever changing geopolitical and economic backdrop. There couldn't be a more opportune time to come together, share perspectives, and decode what lies ahead for the sector. Today's session has been carefully curated to deliver valuable insights into the key trends and strategic considerations shaping the metal industry as we move into H2 2025. We are privileged to be joined by a stellar lineup of experts, thought leaders, and industry veterans who have graciously agreed to share their time and expertise with us today. Together, they will shed light on the global macroeconomic outlook for H2 2025, exploring key economic indicators, policy shifts, and market trends impacting the metal sector. Strategic policy options for India amidst the evolving global economic landscape, technical analysis of currency and forex markets, understanding how exchange rate and movements influence commodity pricing and trade flows, and minor metals demand and supply dynamics, including import export trends, emerging demand drivers, and supply chain developments. It gives me great pleasure to also extend a very warm welcome to our esteemed panelists and distinguished guests in the audience. Dr. A.S. Feroz, Strategic Advisor and former Chief Economist, Ministry of Steel, Government of India. Mr. T. Chandrashekhar, Currency and Commodity Market Strategist. Mr. Atul Goyal, Director of Bombay Metal Exchange, Proprietor Lakshmi Narayan and Sons, a prominent importer and exporter of minor metals. I would like to welcome and thank our sponsor, Mr. Neeraj Nisar, Wealth Builders, for their generous financial support. And we look forward to your continuous work, Mr. Neeraj. I deeply acknowledge the presence of a distinguished invitee, Mr. Pugazanthi, Executive Director, ILZIDA, who will also be sharing his expert views on the subject. And of course, I would like to acknowledge and thank my co-founder, Mr. G. Chandrashekhar, economist, senior journalist, and policy commentator for his continued leadership in shaping these knowledge-sharing platforms. And now, without further ado, it is my privilege to invite Mr. Chandrashekhar to take the session forward and set the tone for the day's discussion. Over to you, Mr. Chandrashekhar ji. Thank you.
Awesome, Veena. Wonderful. You've set the ground very well. Thank you very much. It's such a delight to be part of this. What should I do now? I have to first share screen, right? All right. Good afternoon. Welcome to this seminar of Metal Trends, Metals Market Outlook 2025 second half insights. I just recalled that expression, Ides of March, in that drama on Julius Caesar by Shakespeare. And I'm now, I think it should become now Ides of April. And you know why? By the end of March, when Beena and I discussed the possibility of this event, we hardly realized that April is going to be such a crucial month for the global commodity market, particularly when one Mr. Donald Trump is in the White House. And a lot has happened in the month of April. And therefore, this has led to a huge amount of uncertainty. I think it is in this backdrop that we are going to be discussing global metals market outlook Q2, that's the second quarter, April, May, June of 25, and the second half of 25 in these very, very uncertain times. So let's straight away get into the topic. So as I said, a lot has happened in April. We have tariffs, counter tariffs, retaliatory tariffs, non-tariff barriers, very important. I'll talk about those non-tariff barriers, potential supply chain disruptions, inflation. All the world is facing all of this and is going through all the consequences which are in some way they were not imagined, and even today they are unimaginable. We don't know how things are going to pan out. And therefore, this current situation, in my view, is reminiscent of what happened in 2018 and 19, but it is a lot more scary now than it was in 2018, 19, because we all lived through those times. I have written extensive commentaries and done several shows on television and on seminars, etc. But this time it's really looking scary, and because of that, the future is looking very uncertain and hazy, as I would call. The best part is he announced a very stiff tariff. Mr. Trump announced stiff tariffs, but has suspended them for 90 days. So by early April, he announced the tariffs, and then we suspended for 3 months, which is till early July. And God only knows, even probably Trump doesn't know, God only knows what's in store for us, because we don't know how his mind is working and how it's going to work. Therefore, that's the uncertain part that we need to bear in mind. So what is the tariff status as of today? What's the situation? US has imposed a 10% tariff on all countries globally, irrespective of origin. 10% duty आप कुछ भी भेजो US में, तो उसमें 10% लग जाएगा. This is the primary proposition. On steel and aluminium, the tariff is 25%. On automotive, the tariff is 25%. And I believe on car parts, the accessories, there'll be some announcement sometime in May. And then he's also imposed reciprocal tariffs on some countries like Japan and Vietnam, but suspended for 90 days. And the most crucial part is the tariff on China, 145%. Okay. But uske andar bhi there are exemptions. So consumer electronics is kept at 20%. Primarily because many of the US electronics companies are operating out of China. And therefore, he is kind of reduce the tariff on those consumer electronics like iPhone, etc., to 25%. And then for the US semiconductor and other items like consumer electronics are very critical. And therefore, on them, semiconductor, there is a 25% tariff. And there will be very specific, sector-specific tariffs which are coming soon. Therefore, whole lot of tariffs are known, and there are several tariffs which are looming on the horizon, but we don't know what the status is. Now, what are there are some key takeaways. I call this the global tariff tango. Okay, it takes at least two to tango, as they say. But here there is one person, that's the US president, is tangoing with a whole lot of other countries, 150, 160 countries. Okay, for the global demand outlook, primarily because of the tariffs, in my view, is going to very substantially become weaker and weaker. Already, Europe is not in a great shape. There are other economies which are not in a great shape. China is slowing down, and this growth prospect, in my view, is going to further weaken. But I'm not saying that all markets will be severely affected, or that all markets will be equally affected. No, it's going to affect some markets more, some markets less. It's going to affect some markets more severely and some markets less severely. Therefore, it's a kind of unequal. The evolution of these tariffs and the tariff war will have unequal impact on different nations and different markets. Now, because of tariffs within the US, obviously the cost for corporate will remain elevated, particularly because of the tariffs, and that will create highly, what should I say, competitive pressure as far as US corporates are concerned. And that can potentially, on the other side, create dislocations in other markets that are supplying material to the US corporates. And therefore, corporates within the US are facing very, very uncertain, and some people say hostile environment, which can potentially impact their investment decision, trigger operational volatility, etc. And that's why you find all the reflection of all that in the stock market. The stock market takes all this into account. Therefore, this is the reflection. You see the reflection in the stock market. Now, the question is how our country is going to respond. And in my view, there are three ways in which countries are going to respond. There is a pattern which I'm able to see. Therefore, there are three general approaches to retaliation, because nobody is going to take these tariffs lying down. They will retaliate in some way or the other. Therefore, the first one is direct retaliation, which is China. What China has done, I'll come to that a little later in the next few slides, but China is directly retaliating. China has already imposed tariffs on US chicken, beef, pork, soybean, etc. These are big exports out of the US. For China has already imposed the tariffs on them. They've also imposed several non-tariff barriers. I think I probably have a slide on that a little later, so I'll show. Or let me speak. I think what China has done is they are the largest exporters of critical minerals and metals and magnets. So they have now restricted that export. They haven't banned export. They haven't suspended export. All that they've said is export of critical minerals out of China will be will have the exporters will have to obtain a license. Very, very simple statement. And the system of obtaining a license has not been established as yet. And therefore, the supplies of critical minerals out of China, at least in the short run, is going to be affected. Also, China has prepared a sensitive list of US companies. They don't want to supply to those companies. So that's the second one. And of course, they are also targeting some US companies, particularly tech companies for their monopolistic tendencies, etc. So those are all non-tariff retaliation. But China is directly retaliating by imposing tariffs on certain imports from the US. The second one is threatened retaliation. The EU is still undecided. So उनको पता नहीं क्या करना है, because they have the NATO alliance and various things, military and other aspects also work in all this, and therefore, but they are threatening a retaliation, but they haven't made up their mind finally. But third one is to negotiate and avoid retaliation, which is like countries like Japan and Vietnam, which owe their prosperity to the US. They want to negotiate, they want to avoid retaliation, and they are still in negotiation. And I would even put India in this league: negotiate, avoid retaliation, etc. And therefore, in my view, May and June are going to be extremely crucial months for countries to decide what they want to do. Do they want to retaliate or want to they are working on a negotiation strategy? We don't know, but a lot will happen in May and June, and things could potentially become clearer by early July, in my view. China's response, I think it is here. Okay, so from a metals market perspective, as I said, China is an important player in the global metals market, particularly for rare earths and critical minerals, etc. And these rare earths and minerals are used for high-tech applications, defense, energy, automotive, etc., etc. And therefore, special licenses are required. No system of license issue has been set up. And these, in the short run, the supply of these minerals actually may decline in the world market: tungsten, molybdenum, bismuth, indium, etc., etc. And therefore, their prices can potentially rise in the world market outside of China. Now, what is the potential fallout of the trade war? What can potentially happen? One, very clearly, if the threatened tariffs are implemented even by early July, but there are signals now that Trump may soften his stand, that's the signal available. But yet, these tariffs are going to definitely hit global economic growth, which is likely to be down, estimated to be down or forecast to be down to 2.3% from the earlier 2.8%. the US GDP itself is likely to fall below 2%. There will be a slowdown in the US without any doubt, because their inflation will remain at an elevated level because of tariffs. But my sense, very strong sense, US is most unlikely to get into a recession. In the US, recession will mean degrowth or negative growth for 2 successive quarters. मुझे तो नहीं लगता है US recession में जाएगा, but slowdown is a very distinct possibility, because US consumer confidence, abhi bhi consumer confidence is fairly high, and therefore the likelihood of recession is far less in my view. Europe already in a weak spot, and China is, I think, a matter of concern. Definitely, the growth, the target for this year is 5%, but even otherwise, nobody believed they will reach 5%. People were talking about between 4.5 and 4.8%, but now it looks like that growth will fall below 4% in 2025, which again is a matter of concern for all of us. Now, this is what brings us to the outlook for the second half of 2025. As I said earlier, it is in these kind of uncertain conditions that we are going to discuss this global outlook and the second half insight. Extremely difficult. It's not possible under these uncertain conditions to crystal gaze into what the future has in store for us. But yet we can take some informed. We can have an informed view. We can have a reasonably good view of what's in store for the second half of the year. With these tariffs and then with particularly targeting China, the outlook for base metals has certainly become gloomy. There is no doubt at all. There has been a slight recovery in prices after the 90-day suspension. But in my view, the further recovery potential is limited for the time being. And yet, another aspect is if Trump were to soften his stand, and is signaled that he's going to soften his stand, then there is a potential for recovery. So we have to wait. I think we have to bide our time, wait for the whole of May, whole of June, wait until early July. We'll get a much better sense of the situation that time. So what will happen to tariffs in 3 months' time? We don't know. But until then, companies will remain very, very cautious, because that the trade war is in full swing. Now, tariffs, in my view, are actually going to weaken the base metals prices. But there are other factors which are going to work. There will be price differential. There will be arbitrage. There will be in some market prices could rise, and in some market prices could fall, which we saw, for example, in copper. Prices in the US went up, whereas there was a difference between NYMEX and LME prices, etc., which we saw in our last event. So in my view, of course, copper, as far as Q2 is concerned, should average in Q2 about $9,000, and there is some prospect of a slight improvement in price in the second half of the year. As I said, hoping that things will stabilize in the second half of the year. There could be a small increase in price between $9,200 and $9,400 a ton, as far as copper is concerned. Aluminium, of course, Q2. I think all these prices are here. I'm not going to repeat. I'm sure it is visible. I just saw the International Copper Study Group report came to. I saw that yesterday, but I think that supply forecast is still pending. I think that will be a crucial driver of the market. In case of nickel, I find that there is a supply surplus, but at the same time, demand is also robust. And Indonesian government has imposed some royalties on extraction, and therefore that can potentially raise the cost of this material. Again, the International Lead and Zinc Study Group, I'm sure our friend Pug will talk more about it, and more authoritatively he can talk about it. For the lead, the refined metal global supply will actually be slightly more than demand by 82,000 tons. And the same goes for zinc also. There'll be a slight supply. This is all as of today. Things can morph, things can change over the next 2 or 3 months, but as of today, this seems to be the situation. Now, the question is, can base metal prices move higher? There's no question I was often asked in the last few days. I say yes. I said it is possible. It is possible if, in an improbable event, if the US and China were to strike a deal. Okay, and I said this about 10 days ago. But at this moment, after yesterday's Trump statement, there is some hope that they may probably strike a deal, and the tariff of 145% will probably not hold, and it can come down substantially. So हमें देखना पड़ेगा अभी how things are going to pan out. But the point is, it's a very, very uncertain situation as of now. But next year, 2026, there is a very strong possibility that base metal prices will start to improve, provided the trade war does not escalate. Because the global growth will, I'm sure, overcome the downturn that we are seeing in the first half of 2025. I'm sure the world will overcome this downturn. And in 2026, I see, as of today, as I say, on current reckoning, a reasonably good possibility of demand for base metals improving, and therefore prices also will improve. Therefore, but I want to again share a guidance. I would say for all those who want to trade base metals, exercise caution. Caution, caution, caution. I think this is the mantra we have to follow at least over the next 2 or 3 months until the situation becomes clear. And I would think traders should hold trade nearby positions rather than trade far forward positions, because we don't know what's going to happen in the far forward position. Or it's not going to be safe to trade far forward positions at this point of time. At least from early July, mid-July, there'll be some clarity. But at this point of time, next 2 months, I think we've got to be extremely careful in trading far forward position. Better to avoid actually those. If I have to talk about silver and gold, I think we are in a very, very territory which the kind of volatility, I'm quite wary of making any prediction for gold. We saw it went to 3,500. Next day, it collapses by $200. It's again gone up to some 3,350. I'm sure Chandrashekhar will talk about all that. But one thing is very clear. In my view, if for any reason the war in the Black Sea region and in the Gulf region were to stop, the Israel-Hamas conflict and the Ukraine-Russia conflict were to stop, and it is likely to stop, I'm sure Mr. Trump wants to stop this war and claim Nobel Peace Prize, I'm sure. If in that event, of course, I'm expecting a big correction in gold, easily up to between $300 and $400. Kab hoga, kaise hoga, pata nahi, but this is something we need to bear in mind. And recently, the gold-silver ratio is above 100, which is for the first time in the last 5 years. I think the last time we saw was probably early 2020 after the lockdown, etc., etc. Now, silver prices have been weak because of its industrial character, and industrial activities are going to weaken as per our outlook. But I'm convinced. I'm not a trader. I don't hold any trading position, but I'm convinced silver prices will certainly start to recover because the silver market is in a state of deficit. It will continue to remain in deficit in 25. It's the 5th year of deficit. And when industrial outlook starts to improve, I'm sure there's a good opportunity for silver also to start looking up. And therefore, with this, I want to say thank you very much. I have certain things to say about critical minerals, but I'll keep them back for some time. But let me just say thank you. my disclaimer, my usual disclaimer is no, I don't trade. I don't hold any trading position anywhere, either in the physical market or in the derivatives market. I'm a student of the market, and my views they come out of my own research. Okay, so good luck. God bless you all. Beena Ben, over to you.
Thank you, Chandrasekhar ji, for a highly informative and enlightening umbrella view covering ferrous and non-ferrous as well as precious metals so intricately. I'm sure our audience awaits interaction with you, but we will take the question at the end of the session, and if the time do not permit, we will also take it on the emails, or we can take it on our YouTube channel.
Absolutely.